So all of us in this room, we all have something in common. And if you would join me, I'd like each of you to stare directly at the screen and join me in feeling this moment of absolute terror. Some of you might call that your oh sheet moment. You might be sitting there on the household throne expressing regret and disappointment that you didn't buy another roll. Or you might be wondering, how am I going to get myself out of this situation? What if there were just a button that you could press and immediately your favorite variety of cottonelle were on its way? Turns out there is. It's called the Amazon Dash button. Who here has seen one of these? Okay, a handful of you, about 30%. This is really cool. You can buy them and place them strategically in your home, and they're available in various brands. When you press it, you place an order. And see, Amazon realizes that the I want to buy moment for toilet paper is not at the store. It's not while you're sitting at the office. It's right here. In fact, Jeff Bezos says that Amazon is on a mission to be the Earth's most customer-centric company. And to do that, they have to realize whenever the customer wants something, they have to be there in that moment. Case in point, a few years ago, they released the Kindle Fire HDX tablet. Now, the Kindle Fire is a wonderful tablet, but they did something different. They added one single button to the tablet, and that's called the Mayday button. Is anyone here familiar with the Mayday button? I'm seeing a lot of head shaking. Okay, well, I will tell you all about it. The Mayday button is quite simply this. Whenever you press that button on the Kindle Fire tablet, you are connected within 15 seconds to a support representative at Amazon. Quite literally, you can see their face. They can see your screen. They can hear you. They can draw on your screen. They can show you how to use your new tablet. Now, Amazon wasn't able to do this in a 15-second turnaround. It turns out that the annual average time is just under 8 seconds to be connected with a representative. Who here has ever dialed your telephone and been connected to someone within 8 seconds? It takes me 8 seconds to find the number and dial the phone, much less wait through the phone queue. They're doing this in 8 seconds. Now, how does this make sense for Amazon? You see, if you understand how to use their tablet, you're then going to turn around and buy more books, more music, more applications, more of the things that Amazon wants you to buy on their device. So it makes good business sense for them to make sure that you know everything about the tablet, and you can learn that quickly. So the I want to buy moment is easy to find for toilet paper. It's easy to find for apps and movies and books. But what about insurance? That's a little more tricky, as I'm sure many of you in the room would tell me. So let's talk more about that. One of my favorite examples coming out of insurance today comes from John Hancock. It's actually owned by Manulife, I understand. And this is the Vitality program. You guys heard about this? We're going to do a lot of hand raising, so get used to it. All right. So the Vitality program is simply this. You are rewarded with various points for living a healthy life. You can even earn discounts on your annual premium up to 15%. And they can do a much better job of explaining this than I can, so let's take a quick look.
Protecting your family is smart. Saving money on your life insurance is even smarter. John Hancock Life Insurance with Vitality brings you all the traditional benefits of a life insurance policy, plus additional savings and rewards that you can enjoy right now. Now your policy can pay you back for living healthy. Just keep doing the things you're already doing to stay healthy, or be inspired to do even more and watch the savings add up. After your policy is issued, you'll take a Vitality Health Review online to see how your health stacks up relative to your age. Then you'll get personalized vitality health goals for the year, simple tips to help you reach them, a free Fitbit device, and other convenient, easy-to-use tools to keep track of your healthy activities, like walking, exercising, getting regular checkups, and buying nutritious food at the grocery store. You can also take short online courses on a range of healthy living topics. The more you do, the more vitality points you'll earn. And the more points you earn, the higher your status becomes. With each status level you reach, you'll be rewarded for your efforts with premium savings up to 15% in the next policy year based on the vitality status level you achieved. You could also save thousands of dollars each year on additional hotel, travel, and shopping rewards. Together, your premium savings and rewards could really add up. See how your life insurance can save you money and reward you for living healthy.
Now let's think about this for a moment. Some of you might be thinking, gosh, Evan, that sounds expensive. And you'd be right, it probably is. They're giving discounts on premiums. They're giving everyone a Fitbit device. They're giving out discounts to Amazon and to Whole Foods and Starbucks, right? They're spending more money. But how many times a year do you think a life insurance customer thinks about their insurance policy? I'd argue it's once, maybe twice. Once is whenever they purchase the policy. And the second time is every time they pay their premium. Am I right? I'm seeing heads nodding. John Hancock has changed the game here. These folks, they're not thinking about their life insurance once a year or twice a year. They're thinking about it once or twice every day or every week. The positive touch points alone for the brand are astounding. But it turns out there's some really great benefits as well. So this program is actually, the Vitality program is something they licensed. It's been going on for about 25 years. First started in South Africa. And the academic research on the program reveals that it's making people healthier. In fact, the numbers reveal that the program has reduced hospitalization costs by about 30%. Furthermore, it increases the life expectancy of members by 13 to 21 years. Now let's analyze this. It's better for the customer. The customer is living longer. The customer is paying less, okay? Is it better for the company? Well, I'm not a mathematician. That's actually a subject that I struggled in. However, if I am a life insurer and the person I'm insuring lives longer, is that good for the company? I think it is, because that person is paying premiums longer, and we can hold on to some of that money for longer before we have to pay it out. And then finally, is this a good thing for the brand? We've already established that. You're thinking about the brand more often. So it's better for the customer, it's better for the brand, and it's better for the bottom line. And that, Andrew, is what I call the win-win-win scenario, when we can do all three for our customers. The folks over at trendwatching.com, they tell us that even stupid brands are collecting consumer data. But the difference between the stupid brand and the smart brand today is what they do with that consumer data. In fact, they believe that brands are developing a sixth sense for this information, a term they call InfoSense, which is quite literally to use the data that you have about a customer and use that to learn more about them and then personalize the experience they have. This is nothing new. In fact, Jack Welch said years ago that there are only two keys to competitive advantage. The first is learning about your customers faster than the competition. And the second, putting those insights into action faster than the competition. Insights into actions. And this is what I get the pleasure of doing. Because many of you might agree that there is a gap between people and technology today. you'll find that most technology isn't really built for people. And I'm on a mission to change that. I get to help organizations bridge this gap and understand how they can use technology to create those win-win-win scenarios for their customers. And to do this, I have a framework that's based upon IBM research. I call it the 3 R's. So we'll start from a particular study. 76% of consumers said that they expect an organization to understand their individual needs. And to me, this is all about the relationship you have with the customer. And I see many of you trying to grab a quick shot of the slides. It turns out I've done you a favor. If you will follow along on the Kinetics Insights hashtag on Twitter, I have taken the images of several of these slides, and they should be going out as I'm speaking, assuming technology is on my side today. So you guys can take a look at those. But 76% expect organizations to understand their individual needs. So what is that relationship we have with the customer? Next, 81% demand improved response times. That is, how responsive are we to our customer? And finally, this is my favorite, 68% expect that organizations will harmonize their customer experience. Now, I'm a recovering band geek, and so harmonize is a very important word. If you've ever been to the symphony or another concert and all the musicians are warming up, they're all doing their own thing, and it sounds pretty horrible, right? But when they all come together and they start to play together, it sounds great. That's the difference between discord and harmony. And so when you're expected to harmonize your customer experience, that means that every department in your company, when interacting with a customer, it seems like they're working off the same sheet of music. And to do that, that requires an organization that is well prepared for their customer. And I call this readiness. How ready is your organization to serve the customer? Relationship, responsiveness, and readiness, the 3 R's. And so we will talk through each of these R's today, starting with relationship. So this is, how do we learn more about that customer and put that into action in our interactions with the customer? And to do that, we're going to take a trip. We're going down under to talk about Westpac. Westpac is the 3rd largest bank in Australia and New Zealand. And at Westpac, they have approximately 100 million transactions running through their systems every month. And a few years ago, they took all this data and realized that they could use transactional data to figure out where you as an individual were in your life. So they put together a journey map of their customers. And from this data, they created what's called the Know Me program. The Know Me program is simply this. For every single customer they have identified a next best offer. So based upon who you are, and then people like you, they then suggest from their data the next product you should look into. And so these next best offers are included in every single customer-facing system. This is the important part. Many brands stop after they've established what's next. They establish the insight, but they fail to put it into action. But with the Know Me program, every single phone representative, every single teller in person, they are trained to deliver your next best offer at every single customer touch point. Now, in many organizations, you get the pushback, but we're not salespeople. We're in customer service. We're not here to sell. Why are you having us do this? It turns out they didn't have this problem at Westpac because those representatives truly believed they were doing what was in the best interest of the customer. And it's because they were. Now, how many of you in the room here today would identify yourself as a marketer? You would say, I am a marketer. Okay. So of my marketing friends, I have a quiz for you. If you were putting together a campaign, and we looked all the way at the top of the funnel at the number of leads we might be pouring in, and then we got all the way to the bottom of the funnel, to those who converted. What would be a good conversion percentage? Someone yell it out for me. Anyone? 20%. 20% would be great, in my opinion. I think 20% is where I'm getting a raise, a bonus, and a promotion. Yeah, but depending upon your industry, it can vary. Depending on your business, it can vary. It turns out that at Westpac, in the first year, they converted 40% of their next best offers. And this is the amazing part. This resulted in an additional $22 million of revenue for the bank. And since we're talking about a bank, I should remind you, we're talking revenue, not deposits. This is money the bank can keep and use in its operations. So let's think about this. Is it a better experience for the customer? I'd say so, because the customer is getting real-time, relevant advice they don't feel sold to. And so it looks better on the brand as a result. Furthermore, the company is making more money because of it. So again, we've established that it's better for the customer, it's better for the brand, and it's clearly better for the bottom line. So what do we call that? That is a win-win, say it with me, win scenario. 3 wins. Let's look to responsiveness. This is another of my favorite examples, and you might find that before every example, I'm going to tell you it's my favorite example. That's how much I love these. We're going to go to South Africa, auto insurance provider called Santam. A few years ago, they realized that they had a significant problem with claims processing time and with fraudulent claims. And so this is kind of a catch-22, right? If you're trying to make sure claims aren't fraudulent, you want to spend more time reviewing them before you pay out. However, if your customers are complaining that it's taking you too long to pay out claims, you're kind of stuck, right? You have the option of, do we speed it up and realize that fraud increases? Or do we try to decrease fraud, but speed is going to decrease? Is there a way we can do both? And you might be suspecting, since I'm talking about it, there is a way to do both. So it turns out they worked with IBM to put together a solution that would automatically categorize every single claim into one of 5 categories. The very first category was the low-risk claim. And for these, they spend no time thinking about them. Once the paperwork is in order, they pay it immediately with no additional review. The second tier are what they call digital claims. These are where they need some sort of evidence for the claim, but they're not really interested in sending someone out because it's also low risk. So they ask you to take a photo and send it in. The third tier are their mobile claims. These are where they're actually going to dispatch someone to look at the accident. And number 4 and 5 are the interesting ones. Number 4, these are ones that they believe might be fraudulent. So these are the ones that they then send to a special team for review. And then finally, the 5th ones, these are ones that are particularly complicated, might have a particular legal situation that needs to be navigated, and these are assigned to a special team who specializes in these merit claims, they call them. So with these 5 categories, they were able to find that triple win. So it turns out they were able to reduce their claims processing time by 90%. Again, I've established that I'm not good with numbers, but I think a 90% reduction is a good thing. Now, furthermore, they were able to reduce the amount of claims they paid out by $2.5 million. In fact, in the first month that this system was active, they identified a fraud ring that they had previously not identified. Now, something about auto insurance in South Africa. of the premium that the customer pays, about 15% of that can be attributed to the high rate of fraud. And so by putting this system into place, they were able to detect that more accurately. And so we're looking at a savings with respect to premiums. So there's our first win. Our second win, we're paying out claims faster on average. And our third win, we're actually saving money because we're identifying those fraudulent claims while still being able to pay out the non-fraudulent ones more quickly. Does that meet our criteria? Would that be a win-win-win? I think so. I'm not going to make you say it with me this time, but I think so. So looking now to how ready we are as companies, and this example is particularly important because of some of the storms that we've seen in the States in the last few weeks. And one particular company, Security First Insurance, they're a home insurance company in Florida. And I would imagine that they're very busy right now. In an average month, they receive about 700 claims. And of course, whenever a hurricane comes, that can become thousands within just a few days. So one of the things that they realized about their customers is, in the event of a significant disaster, they had to be prepared to work with their customer no matter how that customer could reach out to them. And so instead of just having their form to fill out for a claim, they welcome you to contact them via phone, via email, via their web form, via Facebook, via Twitter, via LinkedIn. However you can get in touch with them, they're open to hearing from you. And they have a system that they built in collaboration with IBM that will gather all of that content and attach it to the claim and ensure that the proper regulatory processes are handled for those communications. Now, I don't have any hard numbers on the performance of this particular initiative, but in 2013 it won a Smarter Commerce Award from IBM for its solution. And their COO was quoted as saying that their customers receive the same high level of service on any platform. It's equivalent to the service they would receive if they filled out the claim form in detail. Now this is important because we might be looking at this situation and saying they're handling thousands of claims at one time. But in the eyes of the customer, there's only one claim. They're the ones who are waiting for a response. They're the ones who need action from their insurer quickly. And Security First, they're able to deliver on this. So if we look at this through our framework, is it better for the customer? Yes. The customer doesn't have the frustration of having to use just one way to contact them. Does it look better on the brand? If they're able to make those payouts faster, if they're able to respond to that customer more quickly, it absolutely helps the brand. And does it help the bottom line? I'm sure it does. Because the company is ready for this influx of information. They don't have to spend time wasted in settling these claims. They can settle them as quickly as possible. So again, that's the win-win-win scenario. So something you may notice about the 3 R's, they all start with the same 2 letters. That's R-E. Now, I wasn't very good at math, and I'm actually quite terrible at Latin. I really tried, y'all. Y'all, there's my Southern American phrases coming out. I really tried. But what I have learned is that R-E in the Latin is a prefix that literally means again and again. So when you see R-E, it means doing something again and again. So if we think about the 3 R's, in building relationships with our customers, it's not a one-time thing. we have to do that again and again. If we want to be responsive to our customers, it's not about the one quick response time. It's about a consistently quick and accurate response time. And as I was checking into my hotel yesterday, I noticed there were many people also checking in who were much more fit than I am. And it turns out there's a small event called the Invictus Games going on in Toronto. Those athletes, they know something about readiness. They know that you can't start training the night before. Like Security First Insurance, they practice again and again. They build their process. They build up their internal abilities. The same is true for our companies. To be ready in that moment for our customer, we have to rehearse. We have to constantly evaluate our policies, our systems, our processes. And we have to do it again and again. So at this point, I'm going to pause and give you guys an opportunity to pepper me with some questions. I believe Andrew has a mic that we'll run around with. And once I'm done with that, I will have a few more thoughts to finish up. But before I do that, I want to tell you something special I've done for you today. Because I believe in always doing a little something extra for my audiences. And that is that today and tomorrow, if you'd like to get a copy of Blue Goldfish, that's my book, it is available for Amazon Kindle for free. So you can just go to Amazon, and if you have a Kindle or want to use the Kindle app, you can get that for free, my gift to you. So you guys enjoy that. Make sure to follow up and grab that. Again, that's today and tomorrow that's available. And so with that, let's have some questions.
Wow. Thanks. I'm going to get that downloaded. Thank you very much. Evan, any questions do we have? Any questions? I'm going to walk around and make people ask questions.
Yeah, let's not be shy here this morning.
Yeah. Okay, quiz. What are the 3 R's? Raise your hand, somebody.
Oh, I know.
What are the 3 R's? Somebody want to answer the 3 R's? You raised your hand, didn't you? Did you raise your hand? You did.
I'm going to go with relationship, responsiveness, and readiness.
There we go. We've got a winner.
I really appreciate your courageousness. It's that's a question first. And so here's 5 lattes from Starbucks.
Oh, look at that.
See? You get rewards for asking the question. See, look at it. It's coming right away. So,
no one wants
Kim
to
over
be
here.
first, but being
I
second
know.
is
No one
okay.
wants to be first, right?
So the win-win-win philosophy seems really rational. In your experience, though, do you have to fight with companies to see the light, or do they get it pretty easily?
That is a wonderful question. And the answer is yes. Because many of these initiatives, especially when you're dealing with customer experience initiatives, they don't pay off immediately. Sometimes they take 2 or 3 years for you to get that third win. Very much for that, Andrew, and thank you all for the wonderful questions. So as I was preparing for today, I found this interesting study from PwC. One of the things I found here is that 30% of Canadian executives believe that digital is just about customer-facing technology activity, compared to 14% of global executives. So for better or worse, here in Canada, there tends to be a belief, more so than the rest of the world, that digital is just about the end customer experience, the technologies that they touch. However, my belief is that customer experience, especially as it relates to technology, starts at the lowest levels of your companies. Because as you think about projects like a new portal or a new web app or a new mobile app for your customers, those projects tend to be slowed down and stymied whenever you don't have good access to the underlying systems that support your business, or those underlying systems are siloed, where payments are handled in one system and underwriting is handled in another system, and there's a third system where the customer views information. And these systems, instead of working together, are just sending messages back and forth, kind of slowing down the entire process. And so as you think about going forward from today, I want you to think about your underlying processes, your underlying systems. How will they interact with the insurance industry in the future? We hear a lot about telematics today. How are we going to ingest this information into our systems and then use that for our customers' benefit? Are we prepared for that? What about energy tracking in homes? Are we getting to the point where we can accept this information and not just use it to figure out how risky our customers are, but use it to figure out maybe if they have a problem that's brewing, and we can alert them of that ahead of time? Or what about fitness trackers? We've seen a great example of that today with Vitality. How are we using that information? How are we building value for our customers with it? And what about self-driving cars? Our friends over at Google are spending a lot of time working on self-driving cars. What about the day when we're insuring the car and its rules of the road as opposed to insuring the habits of the driver? It's really interesting to think about. Would you sell a policy where if someone has a safer setting on their self-driving car, you would give them a discount? And perhaps that might be enforced electronically without any interaction with the customer. These are important things to think about. These are things that the systems of yesterday were not built to think about. And if you want to achieve those win-win-win scenarios for your customers, you have to be thinking about the next step and then the next step. Not just preparing for today, but preparing for tomorrow. If we think about the 3 R's, relationship, responsiveness, and readiness, I told you that it's about doing these things again and again. So not taking a campaign mindset, but rather taking the mindset of transformational change. So my final thought for you today is, when you leave here, what habits are you going to change in your company? What beliefs do you want to change? What programs do you want to put in place? Think about those as you leave and commit to doing those again and again. Thank you very much.